We have all of the Asian markets which are opening well in the green today.
The cumulative revision over 2 months, minus 101,000.
Next level on the upside is the 50% retracement, which comes in at 19,344.
The overall volume has grown up by 26%.
There have been a lot of upgrades, so expect the up move to continue on that counter.
The market opening, by the way, the Nifty is up almost about 100 odd points.
Platform companies, the trend is unstoppable, as you rightly said.
The relative margin compression has been modest, and also they're guiding for more modest compression in subsequent quarters.
It's been a steady and a strong morning so far, 100 points plus on the Nifty.
We are making presence at the rate of 10% from November onwards.
Two spaces which have done very well for Bharat Forge. One is defense and the other one is aerospace.
So the net profit has come in at around 348 odd crores.
India is stagnated on manufacturing at 18%.
It's a good session that we are seeing in our own markets.
Hello and welcome to Closing Bell, live from the CNBC-TV18 Motilal Oswal studio. It's an all-girls team here. I'm Reema Tendulkar, with me, Surbhi and Sonia. Good afternoon, girls. It was a very, very steady session, but now suddenly you've got that spring in the step, a little bit of an acceleration as we come to the last hour of trade.
And it's not just us, right? I mean, look at the way global markets have shaped up. Asia, I mean, of course, Hong Kong, Korea, South Korea is a different story because of the short-selling ban that's come in. 5% surge in South Korea. But even if you look at other markets like Hong Kong, Japan, largely speaking, the region has done very well. So I think
Europe is actually absolutely flat.
Yeah.
In fact, there is a little bit of red now on the CAC and the DAX. So you're not seeing a runaway rally in Europe. Europe has opened up absolutely flat right now.
Okay, I think overall, right, this market has chosen the geopolitical crisis to buy into it. And we've seen almost, what, a 300-point rally from the lows that we saw in October, 26th October, which was a low. So clearly, that's the playbook that has played out so far. But I think the bulls will take this with both hands, right? We're getting back to that 19,400 mark, which was a bit of a sticky zone for the market. And I think even if you look at it across the board today, the Sensex, Nifty, Midcap index, even the Bank Nifty contributing quite a bit. We've also had healthy set of numbers, no shocker really from the large caps up until now. So that's that as well has aided our market. So just gunning for the top.
I guess it's a small cap index, by the way, take note of it. In the morning only Prashant was telling us we are 1% away or almost there. 1.5% rally on the small cap index. And now it's about 4 points away from its all-time high level. 13,148 is the all-time high level on the small cap index, and we are just 4 points away. Even the Nifty micro cap 250 index, again an indication of the small cap, the interest in the small cap, the buoyancy that we're seeing, that's up 1.6%. And even on the large cap screen, it's a broad-based rally. Except PSU banks, there's hardly any red that you can see.
No, absolutely. I just want to bring up some of the large blue chip banks because in the morning that looked like it was under a bit of cloud. I mean, the way large private sector banks were shaping up. But now they really have, to quote Reema, a spring in their step. Look at Axis Bank, pretty much the day's high on a lot of these stocks. You've got IndusInd Bank that's moving higher as well. HDFC Bank is managing about a 0.5% rise, not too much, but it's really supporting the market. But the story in the mid-caps is really strong. Case in point would be today's listing. It's been a good start for Cello World, by the way, 22% up on that stock and counting. And some of the good mid-cap results, they have been really rewarded. JSW Infra would be a case in point, 10% on that stock and counting. So that's the one to look at. Beyond results, look at a Kalyan Jewelers, 6% up over there. EQ Lighting was another very smart number. We saw expansion on the top line and margins. So basically, wherever mid-cap, small caps, wherever the numbers are good, or some positive commentaries come through, the market is in a very charitable mood and willing to reward those stocks for now.
And even in the space that I track closely, autos, all the auto ancillary stocks have done really well this time. So whether it's Exide, whether it's Bharat Forge, even the larger guys, right, all the OEMs doing pretty well. So let's get some last hour trades going. Mitesh Thakkar is joining in now to help us with that. Mitesh, hi, good afternoon. It's been all guns blazing for the bulls, that is. Do you expect some more follow-on buying here? And what are the levels to watch? What are the stocks you're looking at?
Yeah. Good afternoon. So, yes, I think the view is still positive. One, I think there is no sign of a weakness or a profit booking, and the hourly and the 2 hourly chart, the indicators are rising. So in case, even if you get some kind of a dip, I think that will be a buying opportunity. The target which I was looking was around 19,450 on the Nifty and 43,800 on the Bank Nifty. So maybe around those levels, you will see some kind of, a short-term pivot being made. But till then, I think maintain a long bias. And in case you get an intraday dip, like we got early in the day today around 11:30, 11:45, I think that's the kind of dip you would want to buy into. So about 150, 200 point decline on Bank Nifty, 80 to 100 point kind of decline on Nifty, I think would be a welcome buying chance. And we trade with long bias. These stocks that are on my radar today or right now are SRF. That's given a good reversal. So buy here with a stop at 22.90 for targets of 24.20. And the other one is Abort. That's the stock which is given a big breakout with a strong pricing candle, pricing volume action. That's a buy with a stop below 23,000 for targets of 24,000.
Okay, thank you very much for those trading ideas. Deepak Shenoy, founder of Capital Mind, joins us on the show. Deepak, we'll talk more with about Aarti Industries, SRF on the show now. But just a quick thought. Chemical stocks have been beaten down. Do you think now is a good time to start accumulating them if someone has, say, 2 years, in terms of a holding capacity, given the beaten down nature of the stocks?
I think, honestly, Rima, I think this is like a longer story than that. It's going to take its time to evolve. You're going to need a few, globally at least, definitely you'll need a lot more announcements in terms of people not being afraid of higher rates in order for this industry to recover as an industry itself. Some players, I think, will do better because of better efficiencies. But I would say keep a slightly longer than 2-year outlook. I would say 3 to 4-year outlook, and then you're going to get a bull cycle in one of those, one of the next 3 or 4 years, which is when some of these companies will do well. Most of them have no debt, so they can survive the downturn. So there's not much fear of them crashing. But I do think they will correct in terms of valuations before the big rise comes. So we don't have many players at this point. We're just going to, we have better players to play with in the next few years. So not yet building positions there.
Okay, Deepak, hi, good afternoon. I wanted your thoughts on Zomato. It's been one big mover, right? And very strong numbers, been one of the biggest movers in this calendar year. But are people late to this party now at 120, or do you think that the risk reward is still favorable?
To be fair, Sonia, 2 years ago, the party was at 120. So it was...
so never too late to this party, it seems.
Yes, I mean, it seems like you'll be ordering on it for a while, and you probably ordered it for 2 years, and you're getting 2 years of earnings for free, effectively, if you bought this stock 2 years ago and versus compared to today. But having said that, the earnings are not, they're just impressive because they're not bad. So I think that's the core structure of it, is that they're improving unit economics. We're not seeing, I know there's much more revenues in the Blinkit business, but their economics there are not really working out in any meaningful way for the business. That was our biggest fear, that would drag down the business, and it does seem to be dragging it down. Although revenues are coming, this is not really core profitable, and small bouts like this, I don't think we are going to see this scale at a larger level. Food delivery has scaled well. They are profitable to a large extent. They're able to exert a lot of influence on both the restaurants and on customers. They're seeing an increasing penetration of gold. That's from the fundamental side of things. There's also the fact that while they are EBITDA, well, technically it depends on what you call EBITDA. If you take interest income on the upside, but don't take interest outflow on the downside, then yes, they're EBITDA positive, but really they're not. So they're probably minus 50 to minus 60 crores on EBITDA if you look at it from a traditional EBITDA operating kind of numbers perspective. But they have gotten better. So in that sense, I think it's okay, but I still think it's very highly valued. I think it should be valued at maybe, a little bit around the IPO prices or so, which is when you'll get an upside when they start improving things. From here, it looks like the upside is going to be a little more difficult. So opportunity-wise, I don't like it for the price, but the company fundamentals are definitely improved in the last few years.
Okay, well, stay on. We'll come back to you in a bit. For now, Bharat Forge is a stock on our radar. Very strong numbers coming in from the company. In fact, the revenue growth has been in excess of 21%. Strong margins for the business, and the defense vertical is firing on all cylinders, quite literally. Well, we have Baba Kalyani joining into the conversation now. Dr. Kalyani, thanks a lot for joining in, speaking to you after a while, but things are looking really good. So congratulations on that. I wanted to understand a little bit about the defense vertical, because you do mention that you have a 3,000 crore executable defense order book over the next 24 months. What would that mean in terms of a revenue run rate in the second half of the year, purely from this vertical, or even if you want to, take us a little into FY25 as well?
I think the revenue run rate will keep growing as the quarters roll on, with some gaps in between one order to the next order, because there is a process that takes place. But overall, we are very confident about growth in our defense vertical. We have a pretty good order book. Our indigenous orders will also materialize in December for the artillery guns, hopefully, and that will add to the order book. So things are looking pretty good on all fronts. Yeah.
Sorry, I didn't mean to interrupt you, but this indigenous order of artillery guns, once that comes through, on this 3,000 crores of executable order book, how much do you think you could add on to it?
Well, that will be depending, the order is going to get split between two companies. So depending on is 40-60. So let's say we get 150 numbers. So it'll add some 2,000 crores to this.
Mr. Kalyani, hi, good afternoon, sir. So defense is firing away for you. Can you give us some more color on the core business as well? How trends are there? I mean, the North American Class 8 truck orders, just the previous month, they were looking a little sluggish. That's only one small part of it. But otherwise, non-defense, what are the trends you notice as you enter the second half of the year?
Well, on every sector that we operate, including North American Class 8, we have had big improvements. Matter of fact, in H1 FY24, if you look at our financials, both top line, EBITDA, PBT, we have posted numbers that we posted in the full year of FY20. So that's the kind of growth that has happened in 4 years. And as you're aware, we are in a major transformation phase of moving from components to products. Defense is, of course, one of those transformation phases. There are other things that we are doing, which will start coming in as quarters move forward. So we are very optimistic. We see a strong growth in our company. We see a major shift in terms of the kind of products we make. We continue to make the conventional products that we were making with much higher market share worldwide. So we are very optimistic.
So what about the oil and gas business? There was this one-time inventory correction in Q1, and I believe you had guided for flattish revenues or flattish growth in FY24. Yes. How has oil and gas fared in Q2, and any update on your outlook in this segment?
Well, the oil and gas, the conventional oil and gas that we were doing, which was fracking area, that has a large inventory correction. But I think we are also looking at other opportunities in oil and gas. Overall demand for oil and gas is still strong. We are looking at other opportunities, and we will slowly be able to have other customers that will add to our top line there. So I don't see any problem in that area. Even our new industrial area is started to show growth. We have probably 20% growth over when we bought it. So, things are looking good.
Okay. The other thing what I wanted to check with you was on your debt. So the debt of the company has fallen. If you look at the consolidated debt, can you just tell me, is there scope to reduce debt further in the quarters to come? If yes, what would the year-end target look like?
Our debt, we have paid back some 350 crores, or we're going to pay back another 500 crores. So, yeah, we are continuously reducing debt because that's as per our long-term debt reduction plan, which is there.
So, by when will you pay back that additional 500 crores? Currently, your debt is 2,175 crores on a consolidated basis.
In the next 6 months. In the next 6 months.
Okay.
So just one final point. You mentioned that obviously it's not just defense, where obviously artillery guns are a big focus. But you're saying even in other areas, over the years, the whole transition program is underway, where you move from subsystems and components to actual end products. Can you give us some sort of, idea of timelines, FY25, 26? What should be these big marquee products that we can watch out for? And what does that mean for the company's blended margins? I believe at a company level, you are close to 27% now, as of this quarter that just closed by. So what should we expect in terms of the margin profile, say, a year and a half down the line?
I think you should see something similar or a little better. The big new products that you will see apart from in the defense area, apart from artillery guns, will be armored vehicles. We have a large program on armored vehicles coming up. And a lot of, everything that we do in defense, we will probably do more in the export market than we'll do in the indigenous market. We see tremendous amount of demand coming from many different countries. So we are very optimistic about it.
And so when will the domestic artillery guns order, when is it expected to commence? And same question for armored vehicles?
Armored vehicles we are already supplying to the Indian Army. Artillery gun orders will come. The ATACS order will come hopefully in December, January.
Okay, all right. And you said that was the indigenous order for which you'll add about 2,000 crores, right, to your defense order book?
Absolutely.
Okay, all right. Dr. Kalyani, thanks a lot for joining in. All the best and congratulations once again. Very strong set of numbers. Commentary also has been very positive from your end. So the street likes that. Up about 4% for the stock at a little under 1,100 rupees. Let's slip into a quick break. On the other side of the break, lots more coming up. Stay tuned. Welcome back to NSE Closing Bell. Looks like we're going to have a pretty strong ending to the day's trade. 145 points higher on the Nifty, and the Midcap index looks like it's going to end well, up about 0.6%. One of the stocks in focus this afternoon is Exide. Very good set of numbers coming through. The stock, in fact, has gained almost 50% in 2023 alone. So looking quite good. A revenue growth of almost 14%. EBITDA has gone up about 16%. And the margins are largely stable, you'd have to say, 11.4% versus 11.2%. And the net profits have gone up about 12%. There are some updates on the business as well. In Exide Energy Solutions, that's the company's focus area now. The company will be investing in excess of about 1,100 crores in that business. They've already invested about 1,530 crores in Exide Energy Solutions. So that is the focus area for them. But Deepak Shenoy is still with us. Deepak, any thoughts on stocks like Exide, Amara Raja? Good numbers coming through. And, you know, most of these companies are now transitioning and, you know, sort of looking at the EV space very closely, the renewable energy space, that is. Any thoughts here?
Yes, Sonia. In fact, we own some of them, so very biased. But two things have to happen on the electric side of things, I think. One is the standardization. One of the reasons why car batteries are generally between Amara Raja and Exide, kind of that's the whole market, is because they're all mostly standardized in terms of size, in terms of connectors and so on. We haven't had that level of standardization with EV so far. Definitely not in cars, but also not in two-wheelers. So to that extent, when they build factories, they will have to custom make batteries for every vehicle manufacturer, and they can't really take advantage of their own distribution networks, which they've created for so long with the regular lead acid batteries. So there is that is going to need a trigger point for in terms of standardization. But I think that will happen in the next decade. I also believe that battery manufacturing in India will be given impetus by the government themselves. So we will see a lot more activity from both a regulatory standpoint and the government kind of incentive standpoint as well to buy local, at least part of the battery equipment. There'll be battery management systems that may sit on top. So I am positive on the long-term fundamentals of the business. Right now, they don't seem, the growth does not seem that attractive, but I think it will come in the future. We haven't seen great auto growth as well, but I think that is also going to come in the future. So preparing myself for the longer term, and I believe, this is a good time to, build positions in these stocks. I'm personally invested. I mean, as a PMS also, we are invested, so biased in that sense, but I'm strong on fundamentals. Low debt in general, and an interesting trigger point ahead. That's the summary here.
Deepak, thank you very much for joining in. Auto and auto ancillaries have actually reported pretty strong numbers in Q2. In fact, the best performing sector per se in terms of an outperformance versus expectations. Pashupati Advani of Global Foray is also with us on the show. Pashupati, I remember in our last conversation, you'd said that you're bullish on infrastructure per se, and there were names like, JK, which you like quite a bit, J Kumar Infra, I'm sorry. What about, a stock... What about a stock like JSW Infra? It's one of the new recent listings, port handler, second largest in terms of market share before Adani Ports. But unlike Adani Ports, this one does not have debt on its books, and they're making acquisitions to grow. Is JSW Infra a stock that you've looked at?
Well, I haven't looked at it with the care and love that I probably should have, but it is in the space. It is one of the biggies, and I think it will gradually attract institutional money. The issue with a stock like this is that it comes as a new issue, then it takes a little bit of time to get into the indices and all the other things that go along with that. So as long as that's happening, it's a good time to buy it. But then once it gets into futures, it gets in the MSCI index, it gets in all the other indices overseas, and people start picking it up, then it'll just take a life of its own. But obviously there's no reason to believe that this stock will not perform in line with the others in the same pack, like the Adanis of this world.
Okay, Pashupati, hi, good afternoon. Season's greetings to you. So I think the street is getting in a bit in the Diwali mood, I guess, after the gloom of late October. You tell us, what do you have your eye on? And specifically, if you can, Talk to us about a couple of these companies like Zomato, PB Fintech. I mean, they are really the toast of town suddenly all over again.
Well, if you're watching the World Cup, you know that Zomato's racing because people are sitting wherever they're sitting and ordering deliveries. But jokes aside, people do feel that it's had very good results this quarter, but it'll probably go off. They're giving lesser guidance simply because they feel they've got a big boost because of the World Cup. And I think that's a plus in its favor. The magic four, as I call them, Paytm, Zomato, Nykaa, and Policybazaar. Those are the four that came one after the other. Paytm's been a definite winner. Zomato's now also off to the races. Nykaa's done, and Policybazaar is also sort of doing okay. But I think that's what they call the new wave of stocks on the Wall Street. The new wave where people are going.
But would you own them, Pashupati? Like you say, Nykaa has been like a little there's a lot of competition in that space. Would you buy either of the four? I mean, any of the four? One, all, none?
No. So I was in Paytm. I got out. I'm trying to scratch my head as to whether when and where I should go back. I sold it in the mid 700s, and it went up to 900 something. Now it's in the high 800s. But I think the business model of Paytm is solid. There was rumor also of with Vodafone having all sorts of issues that either Paytm or Amazon would take a stake. That is obviously on the back burner because the Birlas have announced they're going to put some more money in. So that's going to put paid to that. But at the end of it all, both these people, both Paytm and Amazon, need to touch the public, and there's no other way to do it but through the telecom company. And since Jio is their big competitor, they're not going to let them through. And with Airtel, we'll see.
Well, Pashupati, hi, good afternoon. So, the other stock that I wanted to ask you about was what's happening in the auto space, right? Because there's so many companies which are doing well post their numbers. So we were talking about a few of them, whether it's Exide, Bharat Forge, but then there are plenty of others, right? Maruti, for example, had a very strong set of numbers, and so many others in the OEMs. What would your top picks be?
Well, the answer is, have you tried to buy a car recently? So it's like almost impossible because all the cars have a wait list. So I think that obviously Maruti Suzuki has got a car for every budget, and we seem to be going to they're filling all the buttons. The interesting thing is that the luxury market seems to be doing well. There is cars over 40 lakhs, and I think the challenge with that is that none of those companies are really listed. So I think, that's one place to look if you get the ancillaries of that. So then, you've got all the autos and auto ancillaries seem to be going off, even though there was an article in the newspaper a couple of days ago that Bombay's got so many cars that it's got traffic jams, and that, they're letting more cars on and there are no roads and there's too much traffic. So we're heading towards the Bangkok of old, if you know what I mean.
Mm-hmm. So cars are doing well, consumption stocks like Zomato are doing pretty well, but do you see this spreading, this pickup in recovery consumption spreading to the rural markets? Because that's a space where growth has been lagging and been subpar for a while now. So what we've seen so far in the Q2 numbers, Pashupati, are you seeing green shoots, and will the rural recovery be a theme that you would look at closely?
See, the government is basically between now and next May is going to be pumping on infrastructure. So anything to do with, roads, whether it's steel, cement, they're all doing fine. Okay. And that is obviously going to touch the rural area as well, because they want to try and get the last mile. They want to try and get more of the, the tier 2, tier 3 towns and some of the outlying areas into the loop, into the spending, and, give them credit also. The other side of it is you're reading some articles that say that the fintech stocks are giving loans too cheaply and too easily, and high-risk loans, and people are stopping to pay. So that is a little bit of concern. So where those people are, I don't know. But the numbers, they're talking about all people who have made loans of 10, 20, 30,000 rupees. Those are beginning to show some kind of slow payments, maybe slight defaults. So I think that's one of the things that we have to look. Well, pray it never happens, but it's kind of a sword over our heads. So I don't know how to actually track that.
Pashupati, at a wider level, what is this market telling you? Are we past the worst of the worries, high interest rates and surging bond yields, all of that, geopolitics? Are we past the worries, or is this just a period of interim relief?
No, I think you have to look at rates globally are higher than we're used to, and that's actually beginning to hurt some of the larger U.S. companies. But you're actually looking at points at which people are shifting from equities to hybrid funds in the mutual fund sector, into debt, into FDs. I mean, today you're getting 7.5% from most of the banks today in 1 year FDs. So it's a good place for you to be if for people to shift money to. And I think that's actually what's happening. And if you're a senior citizen, you're getting another 0.5%. So definitely the senior money is moving in that direction, because 8% is quite compelling for someone who doesn't have to do anything and doesn't have to deal with the vagaries of our market. And I will say the vagaries of our market again.
Any thoughts on some of these stocks that have been big losers in the last 1 year but are making their presence felt now? Something like a Metropolis. That whole diagnostic space was undergoing a lot of competition, so much pricing pressure, discounting, etc. But now seems like the worst is over and these stocks are up. Metropolis is up 7%. Is this a stock you like?
Well, the whole, I think Dr. Lal's results were out a couple of days ago, if I'm not wrong, and they were quite encouraging. The challenge is that these guys had got a huge amount of business because of testing for vaccines, and they were really making a lot of money. And now they've gone back to normal. But again, we are a country with people with a lot of extra sugar. Over 100 million people are suffering from diabetes, maybe more, 100 million people are detected. So I think all these stocks are getting the benefit of that, and the testing continues. And they are the top of the pack. I mean, the reality is that the 4 or 5 large players are in the space, and they are getting the lion's share because their results and their equipment is high quality, and their results are accepted by hospitals. Whereas some of the not so good ones, they say, please do the test again and go to Dr. Lal's or go to Metropolis. So they are benefiting from what I would call the quality, the perceived quality of the so-called testing centers. So yes, they're going to continue to do well. And let's hope we don't have another bout of COVID or some other vaccine which will give them a boost, but it's not good for the public. But that's what it is.
It's not COVID, but respiratory diseases are on the rise due to very poor AQR in cities like Delhi and Mumbai. But let's see how that plays out. Pashupati, thank you very much for joining in. By the way, 19,400 on the Nifty, guys. It's 173 points up. The Sensex has gained 560 points. I think the recent low was 18,837. So from that level, we've seen a rally of now 550 points plus. So it's been a pretty good comeback. Individual stocks which have moved up as we speak. It's Bajaj Finance at the day's high. You've got Reliance Industries, which is looking up. Bharti Airtel and a couple of IT names. So Wipro is looking up. Infosys too is seeing some buying as we speak. Get into a break on that note. On the other side, we'll tell you what you can buy today to sell tomorrow. Calls from our technical experts.
Welcome back. This is India's decade, says Bank of America's Kaku Nakate. She is bullish on the Indian story and expects the digital economy to be a big contributor to growth. Adds that higher government capex will further aid the economy. Take a look.
India is on the roll. It really seems so. And frankly speaking, people from diversified, so many geographies, people are coming, which makes it really interesting that, you know, people who were, I would say 5 years back ignoring India are now forced to come and really listen over the different conferences. And I'm really happy that we have had a good turnout.
But, you know, there's going to be a fine balance between the old economy that we have been developing in the last few years and the new economy, so to call it, which is digital India. How do you see the balance between both of them? What's going to be the driver from here on?
The digital economy really, constitutes around 8% of the GDP. But we are very confident that by 2030, to your point, that in digital economy will contribute close to around 20% of the economy. So there is a structural shift that we are saying. However, I really personally believe that India is on a multi-decadal, multifaceted growth path. And the levers that are really driving in, one is the government investment in public infrastructure. And if you really see, the capex from private side has only started following the government. Government is spending almost 2/3 of money into the infrastructure. And the capex has already moved up just last year, 8%, taking the private capex to around, close to around 59%. And now the capacity utilizations are at around 80%. So I do see them coming in together with the government. So that's one pillar which is really going. The digital and the transformation that is taking place with unicorns coming in, with the job creations, that is the digital payment platform that has become talk of the world, if I may really say, is the second part of the economy. And that is actually giving us a lot more, I would say, agility in contributing to the world with newer models. And digital payment is only one of them. I'm quite sure ONDC over a period of time will also be successful, again very uniquely placed in the world of, inclusion. The third pillar I really see is, of course, our young talent. Of course, I'm on the oldie side, if I may say, but the 30 under 30, is going to continue for 30 years. That is, a very big demographic, point, and each of them are, the middle classes are moving. I said within the middle class, if I were to say, there are stratas of middle class. And everybody is kind of moving up, if I may say, on the consumption story. Together with all this, the government's intention, which is very spelled out in the last 3 years on sustainability, and India moving to around sustainability by 2070, the net zero targets. And what we are going to achieve just in 2030 is really going to throw up a lot more bigger opportunities. And the final leg, I would say, is geopolitically. We are so well placed, though there is tension in the world. India has become a beacon of resilience and actually promise, if I may say. And the supply chains, which we are yet to develop, and we are on the path with Make in India, the PLI schemes. I think that's going to be adding a lot more, manufacturing capacity, because India has stagnated on manufacturing at 18%. And now I think if you have to take it to 25%, this is going to be this. So if I really were to sum up, these are all the things which really makes me very bullish on India.
Well, and I thought India was only dominating on the cricket pitch, and in this World Cup so far. So we have sustainability, premiumization, and digitization as well. All the, growth drivers are firing, which is pretty encouraging. What more needs to be done, though? If you want to see some kind of a policy push, because the setup is good, but this is ours for the taking. We need to deliver that knockout punch when it's required. So what more would you like to see?
So I do think it's more of the same in many ways. I do think Make in India should be really focused for the country, because in this geopolitical tension era, we need to be self-sufficient to some extent, if I would say, because we have a very large population of 1.6 billion. The second thing, ease of doing business. I think we need to keep working on it and make it easier and easier, if I may really say. And the third thing I would say is that job creation and skills, have to be really worked upon, if I may say, because if you have so much young population, we have to create jobs.
Indeed.
So those are the three things which, we need to continuously work on to de-risk the growth that we are really seeing.
Okay, important conversations coming in there, but let's get back to tracking the markets now. We have about 10-15 minutes left before the day ends, and it's been really a very, very strong day. The bulls go home fighting and winning. Look at that, almost 190 points, 180 points higher now on the Nifty at the high point of trade. Divi's Labs is the one that's surging right now. It reported its Q2 numbers, but there was also a conference call. So Ekta is here to tell us what's the latest on that front. Ekta, over to you.
Well, yes, very positive comments which came in from Divi's Labs in the conference call. So there was an inventory write-off of around 20 odd crores in the quarter. And that was on account of COVID-19 related products and business, etc. But they saw double-digit growth in terms of sales, which is in generic segment as well as the custom synthesis segment. Now, they anticipate numerous growth opportunities going forward. The demand remains stable despite continued price pressure. They seem to be very bullish on the custom synthesis business. So they continue to garner interest from several customers as per the company in the call. The growth engine is going to be driven by big pharma. They're seeing strong growth after a pause due to COVID-19, and they have two big custom synthesis projects which have now gone full scale. Now they see an opportunity in the complex amino acid products as well. They are the only player outside of China, which is a big opportunity according to them, and their capacities for catering to opportunities are ready. There is no additional capacity which is required. As of now, they are one of the most backward integrated companies, which is something that they had indicated. And sartans, which is basically a type of drug, will be in the top 10 of the opportunity size for them. So seem to be extremely bullish in terms of commentary in the conference call, and the markets now seem to have brushed off the concerns with the margins which were down on a Q-on-Q basis.
What a move in the stock, 5% higher now, Ekta. And there are quite a few stocks which are surging in the last few minutes. ICICI Bank, Infosys, ITC, that trio of stocks is pushing higher. M&M is looking smart. You've got Power Grid, which is up close to about 2%. So there is this big 3 p.m. move that you are seeing in individual stocks. And now the Nifty is comfortably above 19,400. Mitesh is back with us for a few BTST calls. Mitesh, from the last time we spoke to you at 2:30, we've seen another leg up.
That's right. So I think, as I said, the market will possibly be drifting on the upside. There could be intraday dips, but I think we didn't get one. And now we're getting closer to an area where I would want to take some profits off, which is 19,450 for Nifty and about 43,800, 850 zone for the bank Nifty. So maybe, be slightly nimble, trade your stop losses on the upside, but maintain a long bias, given the fact that we haven't seen a red candle on the hourly charts as yet. So on the stock side, I have a BTST on Ultratech Cement with a stop at 8,600 for targets of 87.1020 for tomorrow. And the other one which I like is Shree Cement. So both of them from the cement sector. Shree Cement is a BTST with a stop at 26,200 for targets of 26,750.
Okay, got that, Mitesh. Thank you very much for all the trading calls today. You have a good evening. We'll catch up with you tomorrow bright and early once again. By the way, quite a few chemical stocks are in focus today, and one of them is actually having a fantastic surge, Aarti Industries, which is up about 10 to 11%. And there's Gujarat Fluoro, which is in the news because of its earnings as well. That's down actually about 2%. We have Sonal joining in with the latest. Sonal, it's largely been a disappointing quarter for most chemical companies, I think, but Aarti's performance today really stands out. So what's happening here?
It does. For Aarti Industries, it's the sequential recovery that the street likes, and it's the only large chemical player which has seen a sequential recovery. So definitely a thumbs up there. But as you said, on a YOY basis, it was a weak set. Revenue down 14%, EBITDA down 13%, profits down 27% for the company as well. But on a quarter-on-quarter basis, revenue up 3%, EBITDA up 16%. There has been a margin expansion to the tune of 200 basis points, leading to a profit growth of 28%. The company says that the performance was improved on sequential basis due to increase in volumes in several products. They also say they are witnessing gradual demand recovery across segments on a quarter-on-quarter basis, and second half of the fiscal will be better than the first half. They see FY25 as a normalized year, meaning that demand and volumes will come back to normalized levels, and long-term EBITDA margin target remains at that 25 to 30% mark, and that is something which is exciting the stock today. For Gujarat Fluorochemicals, it has also recovered from the lows on the back of some positive commentary, but yes, it was a weak set, no two ways about it. Revenues down 35%, EBITDA down 70%, margins have halved on a YY basis, leading to a profit decline of 85%. However, the company says that they expect margins to improve in next couple of quarters, expect full recovery by Q1 FY25, and FY25 will be better than FY23. Now remember, FY23 saw abnormal profits, so that means going ahead, when all the facilities come on stream, they will have 30% margins in FY25. Additionally, Morgan Stanley has an interesting note on the chemical sector, where they have upgraded SRF and Aarti Industries to an overweight. However, they have downgraded Navin Fluorine to an equal weight, and they have double downgraded PI Industries as well. There has been a change in target prices as well. It will be on your screen. So that is largely what has happened with these companies, and that's the reason why the entire sector is in focus today.
Hey, thanks a lot for that. So the entire sector in focus. Mayuresh Joshi is joining in. He's the head of research at William O'Neill. Mayuresh, hi, welcome to the show. Any of these chemical stocks that interest you from a longer term time horizon?
Afternoon, Sonia. I think as Sonal pointed out, I think a lot of names within this spaces itself had to bear the brunt in terms of destocking that was happening across the globe, expectations in terms of the Chinese dumping taking place. And therefore, I think the realizations specifically for bulk commodities were down significantly. I think to a certain extent, there is sanity returning back. And as inventory levels are at abysmal levels at this point of time, I think it's a matter of time as demand starts catching up. The kind of inventory restocking that will start taking place will definitely have a boost. So that might be a couple of quarters away, which means the second half of this financial year will be mostly a year of recovery for most of these chemical names. And therefore, I think we are a little bit more sanguine in terms of niche chemicals that probably operate in certain specific areas like EVs, electrolytes, as an example, and we will keep an eye out for that. So I think we're not definite buyers at this juncture, Sonia, but our take is that by the end of third quarter, I think there will be more clarity emerging on how the globe is probably positioned. And therefore, stocks like a Neogen, as an example, stocks within these spaces itself sound pretty interesting. So I think I will look out for stocks which are into the niche battery spaces, specifically electrolytes, but I'll wait out for one more.
Do you think there is upside in Zomato from current levels?
Afternoon, Rima. I think it's been a fabulous show once again in the preceding quarter. And what has largely transpired is the entire aspect and perspective in terms of how the numbers have probably played out. So for the core delivery business, both in terms of the absolute number as well as margins has been exemplary. The expectations in terms of the Hyperpure and the Blinkit business, the management now feels Q1 FY25, which means in the next 2 to 3 quarters, there should be a significant amount of accretion happening from these two businesses as well. And that, as that happens, I think the overall losses from both the Hyperpure and the Blinkit business, as it starts receding downwards, I think that will provide the next leg of earnings fillip for the stock itself. So I think a lot has been gestated by the stock. So I think the momentum might very well continue. Existing investors can definitely ride the momentum.
Momentum is the word you can use for the market. It's quite apt this afternoon, Monday. It's off to the races, 19,415, and we still have about 10 more minutes of trade left. We'll take a break, come back and continue the conversation with Mayuresh. Welcome back. Well, one more pocket of the market that has been really excited today is sugar. Some of these sugar stocks, Bajaj Hindustan, for instance, is up 17% right now. It's a pretty huge move. Renuka is up about 6% as well. Let's pull up Dhampur and Balrampur if we can, just to see if some of this is rubbing off on the others as well. But one or two of these names definitely standing out. That's Renuka with the 6% up move. Mayuresh, hi. Festive season. Are you in the mood for any sugar?
Festive season to you as well, Surabhi. After 20 sweets. And in fact, Bikaji Foods also came out with its numbers right now, which look like a stellar set, looking at their packet sweets as well. But yes, for the sugar pack as a whole, I think the Brazilian output is expected to be lower. And with the kind of diversion that is happening towards ethanol at the global level, the expectations in terms of raw sugar prices are expected to inch higher. In the Indian context as well, the expectations because of deficient rains, there might be lesser output, and with consumption expected to remain strong, even if one accounts for the carryover inventory from the last sugar season and some curbs, if any, put on exports, you'll still be having lesser amount of carry turnover for the next year as well. Ethanol prices on the rise, and a lot of these sugar companies have actually extended their distillery capacities and made it operational, which means the kind of realizations from the ethanol story, specifically the B-heavy molasses, where prices have been revised to 58, 59 odd rupees, should be incrementally positive. So yes, I think numbers should be incrementally positive. The only risk factors should be, as I see it, is with elections around the corner, if there are significant hikes, both in terms of FRPs and SAP prices, that might probably subdue their balance sheets. But I think the ethanol structural story probably stays with guys like Balrampur, Dhampur, and the entire package.
So while Bikaji's reported good numbers, and look at the way the margins have expanded from 11.1%, margins have come in at 14.6%, and that's driving a 46% jump in the company's profitability. The stock is up 3.5% today, but QSR companies are not having such a good day. So Barbecue Nation's Q2 numbers appear to be a bit disappointing. There is a top-line growth of 6%. Barbecue Nation's top line has declined by 3%, and the company has reported a loss of 12.3 crore, and the stock reacted adversely to the loss that the company has reported. So QSRs still no noticeable pickup in the numbers. Mayuresh, what about the PSU banks? We've not had fireworks. In fact, there have been a few misses, particularly Bank of Baroda stands out. Given the kind of rally that we've seen in PSU banks, if someone holds PSU banks in their portfolio, should they continue to stay invested, or is it time to switch out?
I think at least the mid-sized PSU banks had a stellar rally, Rima, and the numbers were reasonably okay even this time round. I think the whole angle in terms of how the numbers will now play out, specifically in a scenario where the deposit growth is happening at a higher rate, which means that NIMs are going to come under pressure over the next few quarters. And with some excess provisioning that is expected out of the expected credit loss provisionings that need to be mandated by these banks, there is going to be some relative stress that starts coming onto the balance sheet. Again, a lot of these mid-cap or the second-tier PSU banks, the capital advocacy will also be needed to shore up. And therefore, I think a large part of the rally has probably happened. Some profit booking, if investors can do, I think it's no harm. We've already done some profit booking at our portfolio levels as well. But within the larger names, I think only State Bank, Rima, very frankly, stays on our buy watch list. Numbers were very good for the quarter gone by. And with the base that they've probably got and the expectations that one probably carries on all these parameters probably put together, and with the kind of price move that the stock has probably not delivered as much as the others, maybe this is one bank that probably might stand out over the next few years.
Mayuresh, thank you very much for joining in. We're about to close what has been a very strong, exceptionally strong session for our markets. It's a near 200-point rally on the Nifty. We had a gap-up opening. The Nifty opened at levels of 19,350, aided by that Wall Street mammoth rally on Friday. But towards the end of trade, markets built on that opening gains and finally closing above 19,400. Midcaps, small caps moving in step. The advanced decline ratio firm More than 2 stocks gaining for one on the losing side, and a broad-based rally. Out of the Nifty 50 stocks, only 5 stocks closing in the red, and the one that stands out there is State Bank of India. The gainers list, Divi's Laboratory, top Nifty gainer, posts the numbers. Two-wheeler names like Hero MotoCorp, Eicher Motors rallying 2.5%. Private sector financials had a good day. Axis Bank, ICICI Bank led from the front. L&T was a heavyweight, which added on some heft, and Asian Paints, Britannia, ONGC also stand out on the gainers list.
Yeah, absolutely. I mean, it's been a great day for the broader market as well. The Midcap index is up about 0.9%. Small cap index is up 1.5%. And the market's mood is evident in the manner in which it rewarded some of the good earnings. And we've been discussing these stocks. Zomato, for instance, another 6% on Zomato today. Aarti Industries, as Sonal was describing, the sequential improvement in the numbers, 11% on that stock. JSW Infra, 10%. EIH, strong numbers from the hospitality major. So 5% up over there. Bharat Forge, you just heard Baba